I'm Ashton Addison from EventChain for Investment Pitch Media and FinTech News Network. And today on Blockchain Interviews, we have Santiago Velez, the co-founder and R&D Division Lead at Block Digital. Santiago, welcome to the show, and thanks for taking the time.
I appreciate it. Thank you for having me.
I'm really excited to dive into our discussion today, and I want to start with, I know that you are actually a nuclear engineer by trade, which is awesome. But when you found Bitcoin and Ethereum, you opened that door and it sucked you right in, and I had the same. So I'd love to start with a little bit of your story in when you first realized the potential of digital assets and what you saw in the tech and what keeps you hooked into this industry.
I think for me, the most compelling thing obviously was the price action. It was just this idea that there was this new asset class. You could invest in it. You could see very large gains. But over time, actually, as I've learned more and more about the technology and the whole asset class, I've just been sucked in by the narrative, really. The philosophical implications of the tech, to me, are even bigger than the price action at this point. In fact, I would say that I think that most of the world's on this trajectory now, and there's a number of things that are intersecting, which are all leading to this space. So this to me is the most exciting place to be right now. I can't imagine, any other technology or industry or field that would be as compelling and as interesting. There's just so many different aspects that keep me sucked in. So engineering is not enough. It's a combination of the politics, the philosophy, the technology, and where we are kind of in history. So I think it's a super unique point in time. I consider myself very fortunate.
Yeah, it's really interesting, and I know I love the honesty, and it really, the price action does get a lot of people involved, which is great, but a lot of people then do stick around for the tech, and the ones that realize that this technology is so revolutionary. It's, the internet 2.0 with money, plus a million other things, right? And what usually gets people hooked in is Bitcoin at first, and then those who open the door into Ethereum, smart contracting platforms, and all of these other coins. There's so many different hundreds of protocols that are working on different things, but there are a lot of people that are Bitcoin maximalists, or they think that Bitcoin is obviously it's the largest market cap in the space, but that the other protocols and functionality that's being built with this technology doesn't really provide a lot of value, and they seem to brush it off. I really am a big advocate for Ethereum and the kind of technologies that they have and what they're working on. Do you see that as irrational thought that Bitcoin is really the only thing there is, and what do you see most that you're interested in what's providing value in the industry that's not a part of Bitcoin?
Yeah, so I think there's a lot of truth to some of the criticisms of people in the Bitcoin community that are levied against alternative projects simply because they tend to not really solve a unique problem, or they are scams, or in some cases they're really misrepresenting what it is they're doing to investors. And so from that perspective, I agree that there should be a lot of skepticism applied to projects that are not like Bitcoin, because Bitcoin does have some tokenomic properties which are unique and make it, it was the first, and it has some very compelling narratives that other projects just can't compete with. That being said, I think it's a missed opportunity by a maximalist, quote unquote, to discount the possibility that this technology can be applied in other frameworks. Because the way I see it is, one of the revolutionary discoveries of Bitcoin was this idea that as human beings, we can transact peer-to-peer without a third-party intermediary. And currency certainly is not the only use case where that applies. I think any business or human interaction that has counterparty risk is a candidate for using this technology to mitigate the underlying risks. So to me, that has value, and it would be a shame to only apply it to Bitcoin. In fact, I would even add that originally Bitcoin was this peer-to-peer currency system, and there was discussions around store of value narratives and so forth. But it in itself has transformed as to what it most likely will end up being, which is kind of like a global settlement layer. So it's a little disingenuous to just say, okay, there's only that narrative and all other things should be discounted. So I agree with you. I share your view on the value that these other ecosystems or projects offer.
Yeah, and I love that, Santiago, and I do like your point about the skepticism because, similar to the .com days, whenever there's price action and things, then you always have people jumping in that are trying to make a quick buck as well, and it sort of discounts the underlying technology that actually has value because some people are just there to take advantage of it, right? But there actually is some underlying value in there, and there's a bunch of different industries right now. Ethereum, it looks as though as it continues to grow, with this smart contracting, that it will eventually affect almost every industry. But there are a few that they're working towards first to sort of revolutionize the financial industry and money and tokenization. And I want to touch on tokenization because as the financial industries transform into a more digital and internet-based security tokenization of stocks and bonds and derivatives and the whole stock market, it has a huge potential to transform the entire way that the financial industry works. And security tokenization became a hot topic in 2018. There was a lot of security token conferences that were popping up, and I was going to them, and it seemed very early stage. And there's been a few exchanges popping up, but there's also been a lot of hurdles or talk, but not a lot of action. Have you been following the security tokenization space? What do you see the potential there? And is there a reason that you see that, it hasn't really come to fruition yet? And of course, everything takes time, but I'd love to hear your opinion on that.
I think that's a perfect use case, actually. Securities and securitization is massive because obviously it represents all the other asset classes, from equities to real estate or bonds, gold. I think that the technology got ahead of the regulations, and that's one of the reasons, unfortunately, that ICOs gave a bad name to security tokens, security token offerings. And it just goes to demonstrate that, Bitcoin won't be the one chain that does everything for everyone, right? There's an incredible amount of inefficiencies in the capital markets, from capital creation, venture capital, raising, and then managing equities all the way across and securities all the way across the supply chain. There's so much inefficiency that occurs on the back end that people are unaware of in the financial system that this technology is a perfect candidate for disrupting that. So the thing that I think has held back STOs in particular is the idea of regulations, right? And it's not that we lack regulations, it's that the developers of these technological frameworks, an STO token, for example, did not take into account in the ICO stage this regulatory layer that needs to sit on top, this compliance, and that every jurisdiction has their own regulatory idiosyncrasies, right? You have to consider whether you're going from the US market to a Singaporean market or Chinese market, what the local laws and regulations are. So I think in that case, the technology got way ahead of what the regulations require. And it kind of illustrates that the global financial market is very disjointed. There's a lot of walled gardens, there's a lot of friction, and therefore it's amenable to using this technology to solve those problems, right? This means this is a real problem solving in terms of lower costs, more direct value transfer between corporations and their investors, more efficient management of securities throughout the whole life cycle. So that's what I feel the lesson learned was from ICOs. It just went too far ahead on the tech, and now finally the regulations and compliance are catching up, and we're seeing some very significant firms enter into that space in a big way. So
yeah, it's promising to see more institutional interest in that. And it's interesting. You mentioned the disjointed global capital market system, and a lot of these other economies around the world outside of America are taking those steps to be progressive and to try and introduce tokenization and integrate that into the stock market. I was recently speaking with the Gibraltar Stock Exchange, which has blockchain and security tokenization integrated into the exchange. And with this increased globalization and lower barriers to entry of global markets, it seems like the financial regulators that are willing to take those steps and do things quicker, the money can just move borders and sort of move outside of America to different spots. And do you see that as like America not really being at the forefront of this because maybe it will take a little bit longer on the regulatory side and money may move elsewhere? Or how do you see that playing out?
It's possible. I mean, any institution, whether it's a government or a private corporation, et cetera, that doesn't take advantage of a disruptive technology is bound to be kind of disintermediated. In the defense of U.S. capital markets, it is the deepest and most liquid markets in the world. The dollar is still the world's reserve currency. So the idea that this technology will very quickly kind of disintermediate the U.S. capital markets, I think, is unlikely. However, I think that those jurisdictions that do start adopting this technology and building it into their local securities markets, they're gonna take market share, right? They're gonna be very attractive for both innovation and capital to seek those places out and basically perform regulatory arbitrage, right? So if we have technology that makes things global, but the regulatory frameworks are taken care of by the technology, then there's no reason to remain in the United States. And so that's a loss on the United States side. So there is a need for regulatory improvements, I think, in the United States for more clarity around some of the use cases in the technology, particularly on the payment side. I do think there's plenty of clarity on what a security is and how to construct it. And that's kind of one of the problems on the tech side is that, particularly like in the DeFi space or in the Ethereum space, the engineers who develop these markets and these smart contracts, they're essentially reimagining these systems in an entirely new way, right? And they're approaching it from the mindset of an engineer and solving it as efficiently as possible. The problem with that, though, is that the capital markets are this long historical evolution of, mistakes, regulatory changes to correct those mistakes, and so you have all these protections in place to ensure that bad things can't happen. So I think that's something that developers should revisit rather than just escaping to smaller jurisdictions. It's really trying to work within the existing regulatory frameworks and building a compliance layer on top. I think along with that comes identity, comes KYC, AML, accredited investor status, all of these things that if you really want to bring in a lot of capital to the space and you want to see it grow, you need to speak the same language that the incumbents, the traditional markets speak and that the regulators speak. And I think that actually, in terms of disruption, I think that's even greater disruption because we'll all be the beneficiaries of it while still having those protections that are so important. I think a lot of people in the ICO boom got burned, right? And it left a very bitter taste in their mouths, and it set back the movement for a period of time because it carries with it a stigma to this day, this idea of tokenization. So had we approached it in a more compliant manner, I think we would have avoided that. But nevertheless, that's one of the lessons learned. And I think the industry pivoted very quickly. And now we're seeing some of these products come out that are going to be regulatory compliant. Now, the DeFi space, again, is showing us that the technology way outpaces the regulatory framework. So I'm excited to see what happens there. But I have a feeling we're going to see some surprises.
Yeah, the DeFi space is just super exciting. The value locked into these liquidity protocols just in the beginning of the summer of 2020 was about $1 billion. And now it's over $11 billion, more than a tenfold increase in just a short amount of months. And it really, because of this growth in the price action, there is a lot of speculation that's built into that, and it may be overvalued. And there's also money being raised in the way that ICOs were sort of raising it, where there's really not that much regulation, and it's really just engineers that are trying to rebuild the new financial system. But it really doesn't have to go by the regulations if they don't want to, because it's sort of small at this point compared to the size of the capital markets. But at the same time, DeFi, the vision of DeFi is to be able to have interest-bearing accounts for people that are unbanked, or to be able to get microloans when you don't have access to banking infrastructure in a developed world. So as it stands right now, do you see DeFi moving in the right direction to be able to actually fulfill that for people? Or does twists need to be made to really ensure that it's protecting people, as you say, with the regulatory side?
Yeah, well, I mean, I think in general, I would make the statement that blockchain technology and these different ecosystems, Ethereum being one of them, are excellent, essentially sandboxes for experimentation, right? Trying these things out, these new financial instruments, experimenting with them and seeing what the implications of them are. One of the things we've learned, the lessons from DeFi, is the need for auditing smart contracts and making sure that there's oversight in their construction and that you can anticipate its behavior when it's unleashed in the wild. Because some of these smart contracts have flaws or vulnerabilities. It's not a flaw or vulnerability in, say, the Ethereum virtual machine or the underlying blockchain. Those work perfectly fine. It's a flaw in the logic structure, or someone finds a way to exploit them. So you certainly wouldn't want to take this to large populations of unbanked, the people who need financial services the most, in a rudimentary or unfinished way. So I look at these ecosystems as experimental labs where we're trying new and different things. And that's where I feel the regulators could play a really significant role, is by lowering the burden of compliance to the point where you can experiment rapidly and you can see the pace of change grow. And then once the products are well thought out, tested, and verified, then creating the channels where you can distribute them globally. Because I do think that one of the failures of the modern financial system is that it's left so many people behind in emerging markets. The access to capital, access to loans, micro loans, payments, all of these use cases, even bank accounts. There's just billions of people that have been left behind, and that to me represents a huge untapped market. I think that's going to be the market for the 21st century in terms of growth. So if blockchain starts building tools that solve real problems for people in these markets, and the incumbents do not, then you're going to see their disruption, right? They're not going to be the beneficiaries of that exponential growth in the 21st century. That's just my opinion.
Yeah, that's great, and that sort of reminds me of one of Zuckerberg's quotes of "fail fast and fail forward," right? And once you can get these little flaws out of the way, then you can figure out how to do it right, and you can build the system that actually protects people and is what people need. And we're running short on time, Santiago, but I want to ask you, what are you most excited about for the digital asset space moving into 2021 and throughout next year?
I really like the projects that are building interoperability frameworks. In other words, this idea not just of composability within Ethereum, which is a very important concept also. The idea that you have building blocks and you can put them together to create new and novel use cases, but also interoperability, cross-chain smart contracts, abstractions of smart contracts onto business logic so you can operate on multiple chains at the same time. The reason this excites me is because one of the business problems in selecting or using this technology is that there's no clear winner or losers yet. We're so early that you run a risk as a corporation building on a particular platform. And because of the complexities of the technology, it's very difficult for like a CTO of a corporation to say, we're going to build on Ethereum and it's going to be there exactly in the way we imagine it in the next 10 years. And so this is kind of the time horizons that corporates are dealing with. They're not building for 6 months or 1 or 2 years. And as you know, this space changes rapidly, like at lightning speed. So the idea that you can build frameworks, layer 2, essentially on top of blockchains that abstracts away all of that complexity and makes it easy for businesses to enter the space without being essentially stuck or build their house on sand. That to me is very exciting. I think it's going to see the next wave. And then, of course, interoperability between traditional forms of capital, or like RTGS systems for central banks, or even blockchains. All these things interoperating together. That to me is what I see as the future.
And that's very exciting, and that sort of reminds me of, being able to remove those intermediaries in terms of the currency exchange as well. Right now, different blockchains, you need a centralized exchange for the most part to swap coins between different exchanges. And once we have that cross compatibility, blockchain interoperability, you'll be able to make those decentralized swaps and not have that counterparty risk, and really bring the power back to the users themselves. And I like what you mentioned about businesses as well. You need to future-proof your business. If you're building on experimental technology that's only been around for a short amount of time, anything could happen to that technology, right? And you really need to be a business maximalist, not a blockchain maximalist, and be able to pivot based on the business needs and the environmental changes. And I think that a lot of the businesses in this industry are doing that, and it's the way forward. And so we're out of time, Santiago, but I really appreciate you coming on. I will leave the links to your socials and your companies in the description box below as well for the viewers. And all the best moving forward with your work in the digital asset space. And let's follow up in the near future.
I appreciate it. Thank you very much for having me.